Hello, you're watching Proactive London. I'm joined by Stephen Hemsley. He's the Executive Chairman of Franchise Brands. Stephen, very good to speak with you again. You recently announced your results for 2023, a year where the group doubled in size again as a result of the Pirtek acquisition. Could you summarize them, please?
Yes, I mean, it was another momentous year for the business. I mean, we doubled in size in 22 as a result of the merger with Filta, and doubled in size again as a result of the acquisition of Pirtek in April. It's taken the group now to 7 brands operating in 10 countries. So we're becoming a truly international business.
Stephen, you've said Pirtek contributed as expected in 2023. Any further comments on that?
Yes, 2023 was sort of a bit of a game of two halves, really. And the year started very strongly for all the businesses, including Pirtek, but softened towards the end of the year, particularly Q4 was a little bit softer in all our markets, everywhere other than the US, really. But nevertheless, the overall result for 23 was record profits, and Pirtek in particular performed to our expectations at the time of the acquisition.
Can you comment on the end market headwinds that you referred to in the statement, Stephen?
Certain markets have softened towards the end of last year, and that continues into the current year. And examples I would give would be the construction sector, the hire fleet sector, which is obviously related to construction. These affect Pirtek in particular because when machinery is not being used, hydraulic hoses don't break and we can't fix them. But that has been largely compensated for by growth in other areas, particularly waste management, recycling, transport, particularly railways. So overall, the business is a little bit down on where we were hoping it would be, but trading comfortably ahead of 23 at the moment.
And the key focus for 2024, Stephen?
Well, the key focus going forward from 24, indeed, on to 27, is the integration of the acquisitions and the pay down of the debt. We borrowed 100 million to buy the Pirtek business. We finished the year with 75 million still outstanding. So our objective is to integrate the businesses, drive the operational gearing, which will generate the cash flow to repay that debt, hopefully to a position where we're net cash again by the end of 27.
I mean, with a focus on integrating those businesses, Stephen, what are the main growth opportunities over the medium term?
The objective of the business overall is to grow system sales. I mean, the mantra of Franchise Brands is if the franchisees grow, we grow. So a lot of what we do is focused on growing that system sales, which leverages our income through the management service fee, i.e. the royalty on their sales. And one of the ways we do that is to use something called the maximum potential model, which identifies what the total addressable market is. And then we break that down by franchise area and look at the areas they're serving and not serving, the customers, sectors they're into and not into. And then we help the franchisees exploit those areas. But within our business, we will be looking at integrating the businesses through the use of IT. So we're rolling out a single finance platform across the group. We're going to be rolling out our VisionWorks management software across the Pirtek business. And that will drive a lot of operational gearing for both us and our franchisees.
Well, Stephen, I hope you'll keep us updated on any developments. Thank you very much for speaking with us today.
Great. Thank you, Stephen.
Stephen Hemsley, he's the Executive Chairman of Franchise Brands.